Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals and gold on the rise again. Another week-over-week rally. We continue to see gold creep higher, but unlike most times where we get to a key significant resistance like we did this week, 1300, the market didn't really fade it. And I think right now, if we look at the highest weekly settle going back to April, so for the December contract, and I think right now gold just kind of wait. It's not just waiting. It's not just hype. It's not just the short covering which will come and go as the wind passes. It's really more of, I think, a longer term concern as we go forward. And I don't think that the gold prices that we would typically see rally and then fall off the cliff the following trading session is going to happen this time. And if you look at the dollar's one reason. The dollar got crushed. Ms. Yellen spoke from Jackson Hole along with a number of other central bankers and central bank participants. And really, she didn't have a lot to say about policy or about the Fed or really about economics in general. She talked more about regulatory standards being met and how the economy or the system itself is stronger. And to me, kind of got the sense that this was a see you later kind of a speech, not a let's get busy and get to work, kind of conceding that she may not get another term as Fed chair. So that is yet to be seen. But I think gold right now is sort of just, again, rallying not just because of the positioning and the technical moves. Now there's some real fundamental things. The dollar, one of them. Lastly, I want to mention is that it becomes more about the debt ceiling and tax reform, two things which really have to get through in order for things to stay strong in not only in the greater economy, but in the stock market, and gold is reading into that. So when I look at gold prices rallying to 1300 and then just kind of holding there, despite the news being okay out of Jackson Hole, despite getting some talk about maybe inflation is where it should be, gold prices aren't gonna ignore the fact that we do have a debt ceiling debate coming up, that we do have tax reform that needs to still get through, and likewise we still have a lot of Fed meetings towards the end of the year, and there's still very much a lot of uncertainty. And gold is going to continue to price in that. It's not fear priced yet, but if we start to see some other things pop up like Venezuela and credit issues, or we start to see things fall apart again between the U.S. and North Korea, that will then generate more buzz for gold, which would push prices higher. So right now, gold prices looking bullish, holding bullish, more than what's on the surface here. It to me feels like there's something in the undertow that we're not seeing, but it still is a concern when you look at not only gold going higher, but treasury yields going lower. It means that there's something more on the horizon, and I think we'll get to know more of that. We'll peel another layer of the onion back next week when we get employment, but obviously the debt ceiling and tax reform are the two big issues on the market. This has been Todd Colvin coming to you from the floor of the CME Group.